Hi there traders, this is Steve Mighty, the market chartist for FX Explained and our regular weekly MacroWatch update for the week commencing the 1st of February 2021. GameStop frenzy, wider bubble concerns as stocks plunge. So let's check out the macroeconomic and geopolitical developments in here over the past week. And we can't really recap the last week with a big focus on GameStop in here and the frenzied buying activity we've seen in here reflecting market over exuberance. What we've seen in here is individual traders acting as a herd, buoyed by Reddit posts, particularly from WallStreetBets, buying stocks such as GameStop, but also AMC. We've seen buyers of BlackBerry in here and also the silver ETF in here. And that's seen these stocks surge aggressively higher in here. GameStop has surged 400% in just the last week in here, 1600% for January. And this has seen hedge funds being squeezed out of short positionings. These hedge funds have been targeted, who have shorts in these stocks have been targeted by this community of individual traders. And that has seen them being squeezed out or having to find margin for those leveraged positions in short positions in all of these stocks. Hedge funds such as Melvin Capital under significant financial pressure in here, and that has caused this chaotic activity across markets, and the fear of a contagion, the fear of markets being sold off in here and stocks being sold off in here, even quality stocks selling off in here through the second half of last week, the broader indices plunging lower as the hedge funds in here have had to scramble to cover their leverage positions in these crowded short positions in some of these stocks in here. So Melvin Capital, one that's been particularly hit. And what has also been a contagion is into various brokers in here. So for example, Robinhood suspended trading in some stocks last week and had to call on credit lines in here just to be able to maintain their exposure in the market. So it's this chaos. Markets don't like chaos, and hence the main equity indices across the globe have seen significant sellers in here over the past week, taking out some important technical levels. Earnings reports continued last week. Apple and Facebook did beat estimates, but their forward guidance was not great, and Tesla missed on its EPS, its earnings per share, which was a slight disappointment. But these contagion fears that we saw and that we've already spoken about certainly hitting some of these stocks, even though the results were actually positive. European vaccine issues have continued to cause problems in here, and political tensions, particularly between the EU and the UK, although that seems to be sorted out as of now, and some countries in the EU running out of their stock of vaccines. And we've also seen European lockdown measures tightened, with travel restrictions further toughened over the past week. And the number of cases continues to rise globally. However, we are seeing some positives in here. European lockdowns seem to be having some impact, some positive impact, and slowing the pace of the number of cases particularly, but also hospitalizations, and not quite yet number of deaths in here. But we're certainly seeing some hope in here from European lockdown measures starting to have an impact. So let's take a look at how this has impacted the global financial markets over the past week. Well, the equity indices down. We see Wednesday, Thursday, Friday, significant sell-offs in here. We did get a rebound Thursday, but overall from the middle of the week, all of this contagion, all of this frenzy, all of this chaos around the GameStop Reddit post and WallStreetBets in here, creating market uncertainty, and then that has seen liquidation of even strong stocks in here. Seen liquidation pressures over the past weeks, particularly from the middle of last week. European stocks were already rolling lower and have been hit by that contagion as well, significantly lower, creating topping patterns, particularly on the DAX in here, but we've also seen that on the EU Stocks 50. FTSE looks particularly vulnerable as well. The dollar has benefited, has had a decent rebound through the middle of last week. Looks firm. The basing activity that we've seen in January looks intact, and the dollar rebound, although sporadic and although not necessarily right across the board, we have seen US dollar strength against the yen, surging rally against the yen, and even the risk currencies looking more vulnerable now. Australian dollar rolling lower, looking like a topping pattern. The pound remains somewhat of an outlier in here, staying firm against the US dollar, pretty much sideways in here over the past week. But there are some hints at maybe a little bit of vulnerability coming in for the pound, not managing to significantly extend higher through January. Oil remains cautious, sideways for the second half of January. If anything, potential in here for a slight topping pattern, whereas copper has continued its setback and looks vulnerable to a deeper correction. And the gold future, although staging a slight rebound back on Friday, does still look vulnerable from that early January sell-off. So let's take a look at the week ahead, the week commencing the 1st of February 2021. Well, the focus is really going to potentially be continuing on this whole frenzy. Will we see a shift away from GameStop? Will it go to different stocks in here? Are WallStreetBets going to recommend further buying? And will the SEC or the FCA in the UK or the European authorities get involved in here and look to investigate this chaotic frenzied activity we've seen over the past week? We're going to watch out for further executive orders from President Biden, monitoring for new lockdown announcements in the US and more likely in Europe. And we're going to watch those COVID cases and hospitalizations and deaths as ever, very much staying in the spotlight. And also watching for further rollouts of vaccines or any announcements around the vaccines. Hopefully Europe can get back on track with its rollout of the vaccine programs. On the central bank side in here, this week we get the Reserve Bank of Australia rate decision on Tuesday and its monetary policy statement on Friday. And then on Thursday we get the Bank of England rate decision. On the earnings side, we're going to see Amazon, some big hitters this week. Amazon, Google and Pfizer. And towards the second half of the week, ExxonMobil, PayPal and Merck. On the data front, we have the main standout data in here. We're going to get Monday and Wednesday. We get the global market manufacturing PMI and the US ISM manufacturing PMI both on Monday alongside German retail sales. We get that RBA interest rate decision on Tuesday along with Eurozone GDP. The New Zealand employment report comes through on Wednesday, along with the service sector and composite data from market on their PMI, and also the US ISM services on Wednesday, alongside Eurozone CPI and US ADP employment. Thursday brings that Bank of England interest rate decision, and then we also get Eurozone retail sales, along with the weekly US jobless claims number. And the week rounds off with the RBA monetary policy statement and the always much watched US employment report. We also get that Canadian employment report too. This has been Steve Miley. I'm going to wish you all a great trading week. Please do stay safe out there and I'll be back with you very soon. So traders, don't forget to catch us on the next FX Explained MacroWatch and all the great content on fxexplained.co.uk.